Hey there everybody, Thomas Wood with valuecharts.com, and today we're going to take a look at crude oil, and more specifically a really nice trade we had earlier today in this market in the futures trading room. Now we were all getting along in the trading room around 93, worked out really well. You're all the way up at 94.28, so about 1,300 a contract right now. But I want to tell you why we expected this market to bounce today. There were a couple things we were looking at. The first thing was we came down, we had support on the previous daily lows here at 92.62. We ran the stops below that and immediately bounced back up and never traded back down below that support. Oftentimes that is a clue right away that, hey, there's not enough sellers down there, market could be reversing. The other thing we were looking at that confirmed this was the bullish divergence. So you look at your MQ momentum indicator, you can see we had lower prices, but a much higher momentum reading. So we had strengthening momentum, strengthening cycle finder, lower prices with a run on the stops. All that combined with the fact that we hit undervalued or lower yellow price bar segment according to value bars suggested this should climb. And we had a couple different targets and a couple different things that we expected to happen. First target was the downtrend line here. If you're looking for a day trade, you want to play it safe, you could be getting out at 93.50. Around that trend line, that's about a $500 contract move from where we were getting in. By the way, your initial risk with the trade, you're risking $90 a contract with your stop loss. So you had about a 5-to-1 reward risk ratio. Second thing was, if we could break through the trend line and if we could break through the highs, we had another downtrend line and resistance from the previous highs here, also as a target. That was all the way up at 94.37. So far it's gone up, hit that, and pulled back a little bit. But overall, worked out really well. So if you took the first target, you made about 500 a contract or 5-to-1 reward risk ratio. You took the second profit target, you made about 1,400 a contract or 1,300 a contract, and you had about a 13-to-1 reward risk ratio. So it worked out really well. This is just one of the many examples of trades we place in the trading room, the type of setups we look at, and we tell you, hey, look, here's the line. If it crosses this line, it's a potential long. And so far it's been working out really well. A lot of people made money today and made money yesterday and all this week and last week, so been doing really well. So that's all I have for today. Hope it helps. Keep an eye out for this type of setup. And until next time, happy trading.